All right, let's talk trading. If you've ever stared at one of those charts with all the squiggly lines and just felt totally lost, well, you're in the right place. We're going to cut right through all that noise and give you a solid, simple foundation to get started. Okay, first things first, we have to bust the biggest myth out there about trading. So many people think it's some kind of magic, right? Like you need a crystal ball to predict what's going to happen next. But here's the secret. That's not what it's about at all. It's actually about having a rock-solid plan for when you're wrong. See, trading is really just a game of probabilities. The real skill isn't predicting, it's managing your risk. And I'm telling you, once you make that mental switch from predicting to planning, it changes, well, everything. So here's what we're going to cover. We'll kick things off with the absolute basics, then get into the tools you need. We'll talk about the one golden rule you can't ignore. Get your head in the right space, and then we'll wrap it up with a real strategy you can actually use. Let's dive in. All right, section 1. So what is trading, really? Let's get a handle on what this whole world is all about. You know, when you boil it all down, it's actually pretty straightforward. You're just buying and selling stuff, financial assets, to try and make a profit from how their prices change. You buy something hoping the price will go up, or you can even bet on it going down. That's it. The whole goal is to catch those price swings. And the cool thing is, you can trade all sorts of things. You've got stocks, right, like shares in a company, like Apple. You've got Forex, which is basically trading currencies against each other, like the euro and the dollar. Then there's crypto. You've heard of Bitcoin. And even stuff like gold, oil, those are commodities. Or even a whole basket of stocks at once, like the S&P 500. Now, this is super important. How long you hold a trade completely defines what kind of trader you are. Think of it like different speeds. You've got scalpers who are in and out of trades in just minutes, sometimes seconds. Then there are day traders who wrap everything up by the end of the day. Swing traders might hang on for a few days, even a couple of weeks to catch a bigger move. And then position traders are in it for the long haul. We're talking weeks or months. A huge part of this is figuring out which one of these feels right for you. Okay, so if you're going to navigate these markets, you absolutely need a toolkit. Think about it like this. You wouldn't go on a huge expedition without knowing how to read a map and use a compass, right? Same idea here. And your two most critical skills for reading that map are market structure and price action. So market structure, that's your bird's eye view. The big picture. Is the market generally heading up, down, or just kind of going nowhere? Price action, on the other hand, is the zoom in, the nitty-gritty details. What are the little price wiggles telling you right now? You got to see both the forest and the trees to know what's going on. Seriously, when you look at any chart, no matter how crazy it looks, the market is only ever doing one of three things. That's it. It's either going up, an uptrend, it's going down, a downtrend, or it's just chopping around sideways. And honestly, your very first job as a trader is just to figure out which one is happening right now. Now, let's talk about indicators. Think of these like your co-pilots. They aren't flying the plane for you, that's your job, but man, they give you some super useful data. For instance, you got something like volume, which tells you if a big price move has real conviction behind it. Or another one might warn you that a trend is getting tired and might be about to turn around. They're not crystal balls, they just help you confirm what you're already seeing in the price. All right, listen up, because this next part, this is probably the single most important thing we're going to talk about. I'm not kidding. You could have the most amazing, world-beating strategy, but if you don't get this right, you will fail. It's all about playing defense. It's about being the goalkeeper for your money. I want you to really let this sink in. Successful trading has almost nothing to do with how much you make when you win. It has everything to do with how little you lose when you're wrong. Your number one job, above all else, is just to survive, to stay in the game. And risk control, that's how you do it. And it really boils down to this one simple number. This is the golden rule right here. Never, ever risk more than 1% of your account on any single trade. Why is that so crucial? Well, think about it. If you lose 50% of your money, you have to make a 100% return just to get back to where you started. That's a huge mountain to climb. But a 1% loss? That's nothing. It's a tiny speed bump. This one little rule is literally what stands between you and blowing up your account. So how do we actually do this? Here are the tools in your survival kit. First, a stop loss. This is your eject button, your safety net. It's absolutely non-negotiable. Then you need a good risk-to-reward ratio. You should always be aiming to make at least twice as much as you're risking. That way, your winners more than pay for your losers. Position sizing is just the math you do to make sure you're sticking to that 1% rule. And finally, you got to avoid overtrading. Quality over quantity, always. Okay, we've got the charts, we've got the rules for managing risk, but there's one last piece of the puzzle, and it's the big one. It's the space between your ears, your psychology. This is the inner game of trading, and trust me, this is where most people win or lose. Let me introduce you to the three biggest account killers out there: fear, greed, and revenge trading. Fear is that little voice that tells you to snatch a tiny profit before the trade really works. Greed is the one that tells you to hold on for just a little more right before it all comes crashing down. And revenge trading? Oh man, that's when you lose a trade and immediately jump back in to get your money back. It is the absolute fastest way to go broke. So how do you fight these demons? It all comes down to one word: discipline. It means you build a plan and you actually stick to it no matter what your emotions are screaming at you. It means having the patience to sit on your hands and wait for a great opportunity instead of chasing a mediocre one. It means accepting that losing is just a part of the game. And, super important, it means writing everything down in a journal so you can actually learn from your wins and your losses. All right, time to put it all together. We've talked about what the market is, the tools to read it, and the mindset you need. Now, let's look at how this works in the real world with a simple, actionable strategy. This right here, this is your trading GPS. It's a plan, a checklist that you fill out before you even think about clicking the buy or sell button. You decide everything ahead of time: which market, which direction you think it's going, exactly what needs to happen for you to get in, and, most importantly, where you'll get out for a loss or a win. All the thinking is done when you're calm and rational, not when your money's on the line. And a fantastic strategy for beginners, one that's super reliable and logical, is called the breakout and retest. You see this pattern happen over and over in every single market. And once you know what to look for, it's actually pretty easy to spot. So here's the playbook, step by step. First, you find a really obvious price level, a floor or a ceiling. Step 2, you wait for the price to punch through it with some power. Now, step 3 is the most important part. You have to be patient and wait for the price to come back down and touch that level again, to retest it. If it holds, that's your signal. You enter the trade. Your stop loss goes just on the other side of that level for protection. And your target, at least double what you're risking. See how that one simple setup pulls everything we've talked about together? It's awesome. Whew. So, we've just covered a ton of ground, right? But look, this isn't a get-rich-quick scheme. This is the starting line for your education. We've just handed you the map and the compass. The real journey, the one that involves practice, study, and a whole lot of discipline, that starts now. So the only question left is, are you ready to start studying that map?